Hello and welcome to a CMS Forex daily video recap. I'm your fundamental market analyst Nick Nassad. Today is Friday, July 16, 2010. Let's begin by taking a look at the US dollar Japanese yen pair, which continued the decline we saw in yesterday's session, breaking below the 87 level, which had acted as important support earlier in the month. We reached a low of 86.25 in early New York morning trading, though we did rebound a bit throughout the rest of the session. The US dollar continues to be pressured to end the week as investors question the pace of the US recovery. Here we are at a 7-month low for this pair following weak US consumer confidence report that came out in the New York session. The yen is gaining not only as a safe currency in the midst of a murky global growth outlook, but also from multiple dollar negative factors. Among them are the signs of a deterioration in the US economy, falling US interest rates, and expectations for extended US monetary easing. Yields on benchmark 10-year Treasury notes moved back towards 14-month lows in today's session, and the 30-year yield fell below 4%. That narrows the spread between US and Japanese bonds and adds downward pressure to the USD-JPY pair. In a look at the euro-dollar pair, the euro declined after testing the 1.30 area in the New York session, but we still managed to hold on to most of the gains we had seen in yesterday's session after we moved above the 1.2750 level. The euro has been gaining against the dollar all month as concerns over the Eurozone sovereign debt crisis faded into the background, while the worries about the US growth intensified. The euro also this week benefited as auctions of government debt from Eurozone countries continue to go well, such as the successful auctions this week of Portuguese and Spanish debt. That helped the euro strengthen even as worries over the overall global economy did rise somewhat, especially as it becomes more clear that the US recovery is slowing down. Despite its modest losses against the yen and euro, the dollar did gain strongly against currencies closely tied to the pace of global growth, such as the Australian and New Zealand dollars and the Canadian dollar, as investors flocked to the perceived safety of both the Japanese yen and the greenback. In the USD Canadian dollar pair, we could see that in the last two sessions we have risen from the 1.0280 level to test the 1.0550 in today's trading. That moved us above the trading range we had seen throughout the previous 5 sessions. It also ran up against an old level of support that had held earlier in the month, but then that was broken back here on July 7th. Therefore, if we come back from the weekend and see continued worries about global growth, it's likely that we puncture this resistance level and then move to test the 1.0670 level to the upside. The threat of global economies lurching into a double-dip recession is highlighted by the stream of disappointing US data, including today's worse-than-expected consumer sentiment figures, which we'll get to at the end of the broadcast. That worry caused investors to unwind their bets on higher-yielding assets, leading to steep gains in the yen. For instance, we're looking at the Aussie yen pair in this example, and we can see that we've declined over the previous 2 sessions. Investors are selling these riskier assets, such as Australian dollars, that have been funded in the lower-yielding Japanese and US currencies. In this pair, we see the yen pairing around 61.8% of the rally in favor of the Aussie that we had seen from last week to the middle of this week. Again, this is one of those carry trade pairs where investors borrow funds in Japanese yen due to its low interest rate and park it in places like Australia because of its higher interest rate, collecting the difference between those two yields. However, if global factors make the Australian dollar decline, then the change in the exchange rate can make holding the Aussie yen pair a losing proposition, and the past few days have seen investors unwinding those carry trade bets. In a look at another carry trade pair, the pound yen, we see a very sharp decline in today's trading, amounting from high to low of about 300 pips. However, here, if we zoom this pair out, we see that we do stay confined within a trading range that we have seen throughout most of the last month and a half, with resistance at the 136 level and support around the 131 level. Now let's take a look at the U.S. Consumer Sentiment Report, which caused U.S. stocks to slide sharply, though there were some also underwhelming second quarter earnings, which weighed on investor sentiment as well, including B of A, Citi, General Electric, and Google. The Dow Jones Index, for instance, was down 260 points, close to closing, and the Nasdaq and S&P 500 down 3% and 2.9% respectively. Consumer confidence hit a wall as of mid-July and ebbed to levels last seen in March 2009, with the index falling to 66.5 compared with 76.0 in June. It had been expected to stand around 74.0. Both current conditions and future expectations dropped sharply. The survey reflects worries about job prospects as well as expectations for future income growth. That being said, such moves in sentiment cannot always be translated into weaker consumer spending, and we will have to await July's hard data, particularly retail sales, in order to assess the outlook for the third quarter. In a second report from the US, consumer price data was rather tame as consumer prices slid 0.1% for the month, dragged down by a decline in energy prices. In May, consumer prices were down an unrevised 0.2%. Core consumer prices, closely watched by the Federal Reserve, were actually up 0.2% as prices for apparel, medical care, and cigarettes rose, and that was slightly higher than forecast. Despite the larger than expected increase in core prices, the data shouldn't change expectations that the Fed will hold interest rates at record lows well into next year. Still, the report may ease some fears of deflation. So we end this week on a rough note for the US economy, both via the fundamentals and from stock prices, and as a result the greenback has been sold off. Taking a look at next week's releases, where the fundamental docket will be rather light, especially in the US. On Tuesday, we will get a look at the housing market as we have building permits and housing starts, and that's followed on Thursday with existing home sales. On Wednesday and Thursday, we will also get testimony from Fed Chairman Bernanke to Congress. Around the world, Tuesday brings the Bank of Canada interest rate decision. Wednesday, we get a look at the UK BOE meeting minutes. Thursday, we get flash data from the Eurozone on manufacturing and services PMI, the Canadian retail sales, and a Bank of Canada press conference. Friday, Germany posts its IFO business climate, the UK releases its first reading of second quarter GDP data, and we get consumer price info from Canada. And that will wrap up our coverage of the Forex market for this week. For more news, videos, and analysis, please visit our site cmsfx.com. I want to thank you for watching and wish you a great weekend.